Lower rates matter. I am afraid of what might happen next year.
You know what's funny? If you think about it, you're like, holy crap. It went from stale to hot, just like that. This is a warning to investors, to people trying to buy their homes. Real estate generally doesn't move fast, but the winds blow in different directions and it can catch you off guard.
Mr. Matt, the mortgage guy, I just got off the conversation with Adrian Hernandez, which is a top agent in Orange County, California. And Matt, I am not often taken aback, left speechless. But my conversation with Adrian Hernandez, which I will share with you in a minute, was one of those times where I actually put my head in my palms and was like, this is not good. You ready?
I'm ready. I'm ready.
So, folks that don't know, Adrian Hernandez, big investor in Orange County, agent, broker in the Empire, whatnot. He had a property that was stale, meaning it had been on the market with no action. He was on the cusp of taking a 6-figure price cut to move the property. On Friday, if we don't know, Jerome Powell comes out, talks about the Fed potentially being done, potentially having to lower rates to maintain being restrictive. Over the weekend, social media gets a fluff of rate cuts coming. We go from 8 to 7. Long story short, before Adrian could put in the price cut change Monday afternoon. Now, Grant, remember, stale listing, 45 days on the market, nothing. 3 offers, all at or above asking price. Lower rates matter. And I will close with this. This happened on December 4th. This is not April 4th. This is the winter. This is supposed to be the slow season. I am afraid of what might happen next year. What do you think of all that? What's going on in Sacramento?
You know what's funny is the same stuff. As you're telling that story, I'm thinking to myself, this sounds familiar. And if you think about it, you're like, holy crap. It went from stale to hot, just like that. And it felt like that. And so those that are in the weeds see that, this is something that'll be written in an article in January. Or this will be something that
months from now, February.
Yeah, most people who aren't paying close enough attention will get it later. But it's funny that you say that. We had one offer went out, and I'm looking because I'm, riding alongside investors, and I'm saying, find something that's 60 days old. Go out and negotiate. They're in a position where they have to negotiate. Same thing. Seller, multiple counter offer. Multiple. You went 60 with 0, and now you're countering multiple offers over this past weekend. And so this is a warning to investors, to people trying to buy their homes. Real estate generally doesn't move fast, but the winds blow in different directions and it can catch you off guard. Everything I said, I stand behind. Hey, listen, there's a window of opportunity. Rates are high. Go out and write, a disrespectful offer and get a deal. It's almost all but gone, Mike, because I know it because I'm talking to people every day. There is so much sideline demand, and it's going to start coming off the sidelines. Some of them go, oh my gosh, I can go 699. I'm back in the game. So for whatever reason, the lower you go, like I'm not a rocket scientist, but rates down, mortgage demand up 4 weeks in a row. And the numbers are clear as day. There's a chart that I borrowed from Mortgage News Daily where it shows the purchase number, which is essentially purchase demand. And it charts exactly how you would think. Rates down, mortgage demand up. And so it's not me and you talking about it and telling people, hey, mortgage rates matter. It's data that proves it.
Yeah. And again, I want to highlight again, this is happening in December, which is traditionally one of the slowest months of the calendar year, if not the slowest. And I think what we're seeing right now is what naturally would happen in February and March when the spring selling season gets started. There are so many buyers that missed out, and now they feel like they're getting a deal. I've been saying for the longest time, I've studied consumers for 30 plus years. They always want a deal. And I've said, or I've speculated, and now I think we have evidence, all it takes is a 6 handle, not an 8 handle. and I think we talked on Monday, you did a quote for somebody with an 800 credit score, big down payment. You were 699 with no points, if memory serves.
Exactly. Yeah. And so if they wanted to throw a little bit of money at it to buy the rate down a little bit, they were mid sixes. And what I want to tell people is my biggest fear is that the timing of these rate decreases and rates coming down is the same time where seasonality is going to play into it. There is more demand in the spring. It happens every single year. And if you pour gasoline on demand, which is lower rates, that's what pushes demand up as well. It's going to be a really competitive spring buying season if rates continue to trickle down and they even go down a little bit. And on top of that, we've got more buyer demand because of seasonality. I genuinely feel this. I shy away from trying to sound like I'm selling something or it's, you got to buy now. But the truth of the matter is, if things continue how they look to be going, it's going to be tough. First-time home buyers looking to buy something in April and May are going to have a tough time. There is going to be a lot of buyers out. There's no magic pill that's going to solve the inventory shortage. And so they're going to be bidding against each other. They're going to be waiving the appraisal contingency. They're going to be writing short escrows. Like I've seen this movie before, and you do this enough, and you start thinking to yourself, "Wow, like I really can predict the future because I've seen this and I've seen how it plays out."
Yeah, it really is, and I've called this for quite a while. We're setting up to kind of repeat the last 12 months where it was slow at the end of Q4, and then it took off like a rocket ship February and March. Demand. And again, I want to highlight, you could still get days on market growing because the luxury market is still slow. Luxury is still slow. 2x the median is still slow. Like again, talking to Adrian, he brought up a chart where luxury 2x and above is over 300 days on market. But you go a million and below, which is their median, I think he said it was 40 days.
I want to give an example real quick, Mike, and sorry to interrupt, but
go.
I want to get your feedback, and let's pretend like you are a consultant for my buyer, because I don't want to give advice that people think, well, you're just saying that because
I'll do it.
Okay, this is a real life scenario, and so this is another example that backs up what we've been talking about. 749, been on the market for over 30 days.
Okay.
My client, about a week ago or so, before we really saw the demand kind of flood back, offered 705, I believe. And we're going through scenarios. The rate's got a 7 in front of it.
Sure.
And now this is one of those where all of a sudden buyers show up and a 30-day plus listing has a couple at least buyers. And so we get the seller multiple counter offer at 735. The agent comes to me and says, Matt, rates have come down, right? I go, they've come down pretty considerably since the last thing I showed. And so I showed the buyer how the same cost that they were going to pay for 7 1/8, they could get a 6.625. I think it was like a point cost. And so 705 and 735 payment wise, exactly the same.
Oh, there we go. Okay.
And so my thing to the buyer was, because to your point, there's human psychology involved. I want to get a deal. To them, it doesn't feel like a great deal that it was at 705 because now it's 735. It's only a little bit off of that 750 price. And so I guess, knowing what you know, what's your advice to this buyer? Because I want to tell them, if you liked it at 705, $4,200 a month, it's still $4,200 a month.
Yeah. I guess not knowing them at all is if this is like close to their forever home, which at 750 or above the median in SAC, and it might be, it doesn't matter. But if you are going to be some kind of short-term, 2 years or less thing, then the price probably matters. I'd want to know that story. Like if you're going to be in the house for 8 years or more, it's the payment that matters. So 4,200 is 4,200. Who cares? The only other thing I might throw out there at 735, or I might actually go 740, but then ask for 2 points of credit so that, it comes down. That way the seller feels like they're getting close to 750, but you actually come out way ahead with less cash. I might even do that because then maybe you get even down. Maybe it's not 4,200 payment. So the seller gets a higher top line. My payment goes to 4150 or something. So maybe everybody wins. I don't know. I might
Right.
try that.
Yeah. Yeah. It's tough sometimes to get everybody winning because, there's this psychological thing where it's like, I want to feel like I got a great deal. And unfortunately, in my head, I already think I know it's one of those things where you can be stubborn on the buy side and say,
Yeah.
I will not pay that number. Someone's going
Sure.
to, but
Yeah.
rates are down. It makes sense for somebody else. And so somebody will, but that's probably a fair warning to people is think about what your goals are and go into it with that mindset. Because to your point, price doesn't matter if you have this piece of real estate for a decade plus. There's nothing that I bought a decade ago that I'm like, man, I paid $345. I wish I would have got something at $329. Right? Like, so yeah, good advice, brother.
Yeah. Well, at the end of the day, rates are coming down. Did you see refi demand jump? Refi demand's up like 14% year on year and 10% week on week or some crazy ass number.
I know where they can get a good refinance quote. Go to greatmortgagebroker.com.
There you go, folks. At the end of the day, make sure your mortgage broker is on your side, willing to run multiple scenarios. That is Matt, the mortgage guy. One more time, where do they go?
Greatmortgagebroker.com.
Thank you, buddy.